discipline is not necessarily, or rather success is not necessarily a product of just one effort. Are you getting me? It's not a product of one effort. It's a product of subsequent efforts that have been done repeatedly. This is why there's a place of consistency if you must succeed, either as a trader or anything you do in life. Now, you know one thing I learned about consistency. Now, think about this. There are some areas in probably in your house or something where there's a leakage and water kind of drops from there. It doesn't drop so often. It could just drop a little, drop a little. Now, if that water continues dropping like that for the next 1 year, it will create a little hole right there. As small as it is, it will create what? An impact. Now, why? Because of the consistency to which it's falling with. Or those who have an AC that emits water, just check wherever that water comes out from. You see a little hole right there. So there's power in consistency. So you are in class, come consistently. You're learning, keep learning consistently. Because it is the sum total that now leads to progress and success in the larger fronts. Do you all understand that? So keep summing them up. Keep adding them up. Okay, oh, I'm in class today. What did I learn today? Make sure anytime you come to class, you learn something new. Take down, oh, I learned this today. Okay, how can I apply what I've learned today? Look for a way to put it into action. So when you keep summing that, you sum the other one, in the long run, you'll find out that you're coming to a place of success. Is this clear, please? All right, so that's why I asked us to write that down. So we're going to be picking trades in this class, and that is why we'll be understanding the basics of trading in the global financial market, Module 2. This is Module 2. Understanding the basics of trading in the global financial market, Module 2. Now, what is the purpose of this class, or what is the focus of this class? In this class, we are bound to learn how we can pick trades, how we can execute trades, how we can set stop loss, how we can take profits. Are we clear? So that is what we're going to be learning in this class. So you learn how we can take trades, how we have currency pairs that are paired against each other, how you can, when you buy one, you automatically sell. Can we do a little revision before we continue? Now, we have currency pairs, right? How many currency pairs do we have? Okay, how many? 2, all right. Any other answer?
Many. About
8. Okay, any other answer? Let me get a response. How many currency pairs do we have? Multiple. 8. Okay, no, that's 8 major. Very good. So she just called one of the answer. We have number 1, major currency pairs. We have some other ones. What are the other ones? Cross currency pairs. And what is the third? So how many currency pairs do we have? 3. The first is what again? Major. The second, cross. And the third, exotic. Can we all remember this? We're doing a revision before we move further. Please take note of this. It's very important. Why is the basics very important again? Because your foundation. So your foundation is very important. So major currency pair, cross currency pair, and what? Exotic currency pair. Now, what are major currency pairs? Major currency pairs involve pairing the United States dollar with any of the 8 major currencies. So who can remember the 8 major currencies for us? Any of them? Okay? Sorry?
British pound.
GBP, okay? Just the pair, just the currency itself, not pair now. Euro, very good. We have to. No, just single. The pair. The currency rather. JPY, 3. Who said CHF? Alright, CHF. CHF is Swiss, it's same thing as Swin Franc. Does somebody have called EUR? We have 4 more. 4 more to go. Alright. Okay, AUD, very good. That is 5. Okay, that is 6. That's called NZD, that is 7. Remember 1. No. CHF, that is Switzerland. All right. So Basically, we have we've called over apparently, 8 major currency pairs, right? Major currencies. I'm trying to divide the type of currencies now before we go into this. Remember, the first we have is USD, we have Euro, we have GBP, we have JPY. What's the meaning of JPY? Japanese yen. What of GBP? Great British Pounds. Very good. We have CHF. What is CHF? Switzerland franc. Very good. We have AUD. What is AUD? Very good. We have NZD. What is NZD? New Zealand what? So there's one more that is missing now. We have CAD. What is CAD? Canadian dollar. Very good. So these are the 8 major currencies. Now, as a standalone currencies that we have in the global financial market. Are you all following me? 8 major currencies. Okay? Are we all together? So now, pairing these currencies together is what gives us major currency pair. Is this clear? When we now bring them together, that is what gives us clearly what we have as major currency pair. And what a major currency pair is pairing the major currencies with the United States dollar. Do we get that? Pairing the major currencies with what? The United States dollar, which is USD. That is what it simply means. So that is what it simply is. So if we are pairing it to the United States dollar now, can we call some major currency pairs? Let me hear. Call some major currencies. Sorry? No? Okay. USD JPY, correct? Sorry? What did you say? Very correct. GBP USD. Okay. Which one? USD USD? Okay. I don't say USD USD. Okay. USD card. So it's not USCAD, it's USD card. Okay. So what next? Okay, so it's EUR USD. Okay. AUD is AUD USD. So now, this is how the pairing mechanism works. The pairing comes from a point where there are certain currencies that have a better performance than the United States of America in terms of exchange rates. For example, Euro has a higher exchange rate compared to what? Dollar. Pounds have a higher currency rate compared to what? AUD is almost in equilibrium and sometimes goes above the dollar as well. Are we getting this? So that is how it's being paired. Is it clear? So I'm glad we know this one. So the next we have is cross currency pair. Am I correct? Cross currency what? Okay. So who can give us an example of cross currency pairs? Now what is cross currency first? Cross currency involves pairing the major currencies without adding the United States dollar to it. Is it clear? Major. We are pairing the major currencies with the United States dollar added to what? To it. But when it comes to cross currency, we are just pairing the currencies without adding the United States dollar. Is it clear? So who can give me an example of cross currency? Euro GBP, very good. NZD. Is it NZD or AUD NZD? AUD NZD. Okay. CAD JPY. That's CAD JPY. Okay, EURCHF, very correct. Can you see that we're bringing these currencies together, but we are not adding the what? The United States dollar to it. I understand. We're revising on what we learned last week. Now, the next we have is called exotic currency pairs. And this one, everybody should know this one. So what are exotic currency pairs? Exotic currency pairs involves pairing a currency that has a better economic performance with a currency that is just having a developing economic performance. Is it clear? So when you want to call some currencies, which currencies will you call in all of this? USD what? I don't know what you are saying though. USD. That's why I say I don't still know what you are saying. Why are you using our beloved country as an example? So USD NGN happens to be one of it. USD NGN. Which other currency can you call again? Okay, very good. USD ZAR, that is South African Rand. Are you getting this? So these are what again? These are what again? What kind of currency pair? So breaking everything down, we have how many types of currency pairs now? Three, right? The first one we have what? Major currency pair. The second one we have what? The third one we have what? Exotic currency pair. Do you all understand all of these things? So what is the next? So it's pairing currencies of nation that has a developed economy, a well-developed economy, with the currency of a nation that is just having a developing economy. Do you understand? So United States of America has an already developed economy. Nigeria is still. So that is a perfect example. I love that we use ourselves for the example. We are not biased. All right. I gave a clear example, right, where if in 2010, Naira to dollar was 120, and in 2024, Naira to dollar becomes 1,900. That's if you want to get 1 Naira to dollar. Now, how do we make money from the markets using this example? Who can give an example? How do we make money from the global financial markets? Who can give me an example? Within 2010 to 2024. Anybody? Anybody can give me an example. Okay.
In 2020, if I bought.
In 2020?
In 2010.
All right.
If I bought dollar for 120.
Which, how much let's see, how many dollars will you have gotten 120?
Let's say
how much?
$1 is 120.
Okay. So now how much will you have gotten? Let's imagine you have the capacity.
That I bought?
Yes, you've gotten it already.
Yes, I've gotten it already. And at the time I bought it, it was worth 120.
So what do you buy? How much in dollar did you buy? I want to know. Just give a figure. You are correct. Just give me a figure that you would have gotten then.
No, I would have got like $1,000.
All right. So you'd have gotten $1,000, right?
Yes.
Okay. At the rate of 120. So that would have been how much in Naira?
120,000.
120,000. Okay. 120,000. All right. So if you had continue.
Yes. So by 2024, if I sell the dollar I have, the $1,000 I have, at 1,900, I would have made a whooping 1.9 million.
All right. So in 20, this is in 2010, you'd have made a whooping how much?
1.9 million.
Without doing anything.
Yes.
Right? So why did you think you made this money between 2010 to 2024?
Because the value had rose.
Very good.
120 to 1,900.
Do you all understand that? That's a perfect example. Why? Because the value of dollar increased, and what happened to the value of Naira? It decreased. And it didn't just happen. This is because of economic what? Performance and factors involved. Now, let's be on a very factual level. In some 20 years, 20-something years, 25 years ago, the infrastructural capabilities in Nigeria was almost equated to that of the United States. Am I correct? Some of the houses, some of the cars, some of the things they do there. But can you compare it now? Can you compare them now? In terms of development and improvement, can you compare? How about economic performance? Can you compare? I mean, it's clearly seen in the exchange rates. Are we getting? There was a time in Nigeria where 1 Naira to dollar was how much? Was equal to 1 Naira was equal to one what? $1. The whole at the same price. There was even a time I heard that Naira had a higher currency value compared to the dollar. But what has happened over time? We've gotten a very bad. I did not talk for this. I did not say government though. We've sure had. We might have a lot of government lights here that will come and arrest me after APC. I don't know. What is the meaning of APC? Okay, I don't know the meaning of APC. All right. So I hope you just understand what I mean, right? There've been a lot of economic differences between the performance of America. There's a lot of inflation. A hike in what? Inflation. Think about how much you purchased things from 5 years ago, and think about how much you purchase them today. And guess what? I don't expect it's going to be any better. So instead of you to wait for Nigeria to become better, increase your earning capacity. Because it's not in your control. If Nigeria becomes better tomorrow, is this still in your control? If they become worse, is this still in your control? No. So what is in your control is to increase your earning what? Capacity. And that's why I'm glad you're in class here. So what else again? We spoke about all of this. We spoke about the history of the market. Did we speak about that? Or let's leave the history. We spoke about those that participate in the global financial market. Can you recall that? Those that participate in the global financial market. So who are the people that participate in the market?
The banks,
Central banks, okay.
individuals, brokers.
Individuals, very good. Brokers, institutional investors, commercial central banks, right? Very good. Individuals, we're all following. So we said the market is the biggest market in the world that has a daily exchange of over how much? $7 trillion. Now this is in average. It simply means there are times we could go above, but both in a good and in a bad market day, how much is being exchanged? $7 trillion. The last time somebody spoke to me, he said we're going to close to $9 trillion thereabouts. So this is showing you how big this market is. And you know the question I keep asking? Imagine that somebody gives you access to a house, the house sitting in it, right? Sitting in that house. It has 1 billion, 10 billion naira. What will you do? Honest answer. Are you looking at me? You are in a house. I gave you key to a house. And I said, this is a house. It has over $10 billion in it. To do what you want. What will you do?
I'll first of all own the house.
Oh, you already going for it. You never carry money. You want to invest. Okay.
I'll use the money to invest.
I will first of all own the house
Okay.
so that I will start to.
Any other person with a contrary thought? What will you do? Well, I think he has given the best answer. Because when I own the house becomes what?
My own.
I can decide who enters my house or not. But you that want to go and invest with it, it's not. What if it's the house that manufactures the money every day? Exactly. But yeah, the forex market is a whole big room that gives you access to make as much as you can. You just need the right knowledge and the right platform, and that's why we have PU Prime. In order for you to make so much from the market. Are we all together? Are we all understanding? So, I'm sure with this, we understood the first module of the market, right? From the currency pair to how we make money from the market and how things have come to be. So now let's go through a class again that will teach us how we can pick trades, how we can open and execute trades in the market for profitability. Now, we have two types of prices. We have the base and quote currency in what? In trading. Base and quote currency. Now, what is a currency pair? A currency pair is simply the combination that you are bringing together two different what? Currencies that are quoted. The word quoted simply means that are priced against each other. It simply means the price of this currency versus the price of this other currency. Example, $1 versus the price of Naira. So if you bring $1 and want to purchase $1, can 50 Naira purchase $1? No. Are you understanding? So pricing them against each other. The price of this currency paired with the price of this other currency. So that is what we can simply define as base and quotes. So currencies are quoted with each other, where we have two different currencies that are priced against each other. Now the first currency is called the what? Base currency. Are we together? The first currency is called the what again? Very good. What is the second currency called? Quote currency or counter currency. So in this case, which is our base? Euro or USD?
Euro.
Is our base. What is our quotes? USD. Are we getting this? The base and the quotes. Now, why is it important to understand this? Now, let's look at it. Why it's important you get this? And this is simply because the market are always quoted against what? Because it's a market. Every market has activity of two individuals. Who and who? And who again? The sellers. So you are either buying or you are what? Selling. Imagine you go to a market and everybody in that market are selling and nobody is coming to buy. Will money be made?
There will be no market.
There will be no market. Everybody is buying. In fact, you can't buy until there's somebody to what? So it must be a balance. That wherever there are buyers, they are also what? And wherever there are sellers, they are also what? And that is where every currencies are quoted against something. They are quoted against something. They are paired with something. Are you all following me? Every currencies are paired with something. So the price of a currency pair. Now, what do I mean a currency pair? When you join the both together, the price of the both of them together simply means how much of the quotes will you need in order for you to purchase the base. Are you getting this? The price of a whole currency pair simply means how much of the quotes will I need to buy what? The base. Now, what do I mean by this? Follow me. We have USD what? NGN, right?
Yes.
Am I correct? This falls under what types of currency pair?
Exotic.
Do you all agree? What type of currency pair, please? Right? Now, if I ask you now, sitting here today, what is the price of USD to Nigerian Naira? What is your response? Give me a good response, actually. Is one what? 1385. 1385? Right? Are you seeing that you are giving me the price of the both of them combined? Are you getting this? That simply means in order for me to buy one USD, I need how much? Let's say 1.4. Do you get this? So the price of this currency pair is how much? 1.4. Do you understand? Because 1.4 is what keeps them at equilibrium. Simply means 1.4 is still equal to $1. So the price of a currency pair is simply how much of the quote currency, which is the second currency, are we going to need in order to purchase 1 unit of the base currency. Does it make sense to you? Do you understand this? But mind you, both of them have their different prices. Now let's go further in this so that I break this down for us for better understanding. Please, if you come, just come straight to the front. Quick, mommy. You can sit where you probably see clearly.
No, sir.
Yes, yes, sir.
Does it mean that the value of both currencies are one?
Yes, that is the pair. The pair now. So the value of the boats. Let me put it this way: $1 is equal to what? Sorry, $1 is equal to what? Today, let's say 1.4, right? Can we say this is the same thing as this?
Yes.
We can say it's the same thing, right? So that's why it's called a pair. So this is dollar now. This is what? But are they the same? No. I mean, in price, are they the same? But in currency, are they the same? No, right? But pairing them together now, they have one price, which is how much? 1.4, which is also what? $1. Does it make sense now? So that is why the price of a pair. But in this case, we use the quote currency, which is the second currency, to get the price of the whole pair. Do you know why we do this? Now, this simply because when you buy the base, what do you do to the quote automatically? You sell. Are you following me? And when you sell the base, what do you do to the quote automatically? You buy. So it happens vice versa. So if I choose to sell euro right now, what am I doing to USD? I'm buying USD. If I choose to buy euro, what am I doing to USD? I'm selling USD. Do you all understand this? So what you do with one inversely affects the other one. Are we all getting this? So remember, like I said, when you buy one, you are buying one currency while selling the other one automatically. Now, what is the next thing to this? Every currency pair consists of two prices. Every currency pair consists of what?
Two prices.
What is the first price? The bid price. What is the second price? The ask price. The first price is the bid, the ask. Now, put it this way. When you go to any marketplace, what do you do when you meet the person that sells a particular product? So you ask, right? Yes. So the ask price is your what? Buying price. Are you following me? And the bid price is your what? Selling price. It's very important to understand this so that when we are picking trades, you understand what price you are buying at and what price you're also what? Selling at. So it's very, very important to get an established understanding of this. So here's what is the price? Can we call it out together, please? 1 point what? 1524. What is our ask price?
1.1527.
Can we also do this? 1.1527. All right. If you need to snap, you can just snap this instead of copying down the notes. It will be easier to snap than to copy down the notes. But I hope we are all understanding. Do you have any questions so far? Is there any questions so far? Now, those online, is there any questions so far? Those of us online, do you have any questions so far? All right. Let's move further. Now, this is how it will be represented on the charts, especially when you're using a laptop. Now, you can see two prices again, the bid and the what? Remember, the ask price is what price again? Is what price again? The bid price is what price again? It simply means if I had wanted to sell, how much would I have sold out at this point right here? I would have sold at what? 85946. How much would I have bought at?
0.5964.
Are we getting this? We're going to do a calculation of all of these things. So patiently follow me through. So, coming from all of this, from the image, you can see that Euro GBP has a bid price of 0.85946. Sorry, just a minute, please. So while this is coming up, let me do a little refresh for those of us who are just attending this class. I think this is your first time in class, huh? This is also your first time in class. Okay, this is also your first time. So let me do a refresh of the basics. I'll just run through this. In today's class, we are basically focused on picking trades. So you probably have to attend next Tuesday class as well before then. But be in class this Thursday because we're going to be trading live this Thursday. Sorry, why this comes up. All right. So the global financial market, as the name stands, it's a marketplace where we have ability to buy and to sell. But we're not just buying and selling physical products. Are you getting me? It's not like a market where you see the product physically. You are buying the value of that particular product. So for instance, if the global code is 2,000 plus, in the physical market it's also going to be 2,000 plus because on the online market it is reflecting what is happening in the physical market. Are we getting this? Now, how do I even put it in a clear way? All right, take it this way. Naira to dollar is how much today? 1.4, right? If you go to the physical graph, what are you going to see there? 1.4. So the global financial market gives us a graphical representation of what is happening in the global world as it relates to certain currencies, certain price, or certain pair. I think while in school, many of us did something in mathematics with bar charts or pie charts. Am I correct? So what was the purpose of bar chart and pie charts then in school? To represent data, right? Illustrate data. So let's imagine I have a bar chart. I'm just trying to refresh for those of us who are coming into class for the very first time. Let's imagine I want to represent 3 months from, let's say, I think October, November, December, right? So from October, I sell shoes for a living, right? I sell shoes in wholesale. I want to check the prices of shoes I have for October or that I got to purchase for October. And looking at the prices, I got shoes for about 40% the actual cost in the month of October. So this is October. In the month of November, the price of the shoes increases to what? 50%. And the month of December, the price of the shoes increases to about 80%. Now, it is normal that people will most likely buy shoes in what? December. Because of what? Christmas. Can you prepare yourself for the next coming year to buy ahead of time?
Yes.
Am I correct? So that is the same thing in the global financial market. Just like this thing represents the data of the physical world, that is the same thing the graphs you see in all of this market does. It shows us what is happening in the physical, global, economical world. Did we get this, please? And that is how we get to know, okay, should I buy this or should I sell this? Now, I spoke of dollar in 2010 being how much? 120, right? 120. Now, if you go to the graph of dollar to naira, you will see that there's been a very great increase from 120 to how much is it now? 160 thereabouts. Do you understand? So what has this graph simply done? It has represented the price movement of the global economy that is happening physically in a graphical manner. Because in a graphical manner, rather, you can interpret this and make money from what? From it. Is it clear? So we're going to go detailed in this probably next week. So don't miss Tuesday's class next week. And don't miss this Thursday class as well. So let me continue from where I stopped. Now take a look at this. This is Euro USD, right? And the price of this currency pair is how much? 1 what? 1 4. Or $1.4, right? 1 point what? Now what does this simply mean? It simply means, in order for me to purchase 1 euro, how many dollars do I need? So 1.4 is just like the price of USD to MG. I'm repeating this over and over again so that you understand the example I'm trying to portray. Just like the price of USD to NGN. We said that USD today will use the rough price of how much? 1,400. It simply means for me to purchase 1 USD, how much of Naira do I need? 1,400. So what is the price of this currency pair? 1,400. If you pair the price, bring them together. Is it clear? All right. If you have questions, please ask as we're moving forward. And those online as well, if you have questions, kindly ask the questions. If you have questions, kindly ask me. Kindly ask me to get clarity in any area you need clarity for. All right. Okay, I think we have over 400 persons here, so it's not possible there are no questions. So kindly ask your questions, please. If you have any question, kindly ask so I give clarity to them. All right, so this is basically how we make money from the market. By taking advantage of what is happening with one compared to where? The other. Are we getting this, please? I'm trying to explain this because when you understand how we make money, you are positioned in the right setting to actually make what? God forbid, let's hear this because anything that happens to America and America enters war, it has become World War. That's why I said God for what? But let's imagine something happens and the United States plunge into war. What do you think will happen to their economic activities? Will it increase or will it plunge? It will what? It will come down because they can't be active economically when they are fighting what? War. So if you have dollar, will you keep the dollar? No. What will you do to the dollar? You sell the dollar to a currency that has a higher what? Value. Is this clear now? Let's even put this in the literal world. If I'm to gift you money now, my mind becomes very good. My mind is not bad anyways, but I will not gift you money. I might not. So if I'm to gift you money right now, and I ask you, should I gift you in dollar, or I should gift you in Naira? Which one will you prefer? Like the same equivalent? Dollar or Naira? Dollar or what? Same equivalent, dollar or Naira? Who chooses dollar? If you go for dollar, let me see your hand. Okay, let's just put it same equivalent. If you go for dollar, say aye. This I know won't give chance for nay. Okay, if you go for Naira, say nay. Thank God you are the only one standing. You are the only, you will stand alone. Do you know why I'm saying this? These guys are still improving. Are we getting this? So the chances, to be very honest, for the economy of America to increase is what? So if I give you $10,000, it might be 14 million naira today. Tomorrow it can be how much? 15 million naira. And many of us don't know the power of exchange rate. Is that even $100 difference, you can make a whole lot of money. If I choose to buy $1 million for 1.4, right? How much am I going to buy it? How much is it going to be in Nigerian naira? 1.4 billion what? Naira at 1,400. Now let's imagine the price increased from 1.4 to 1.5. How much have I made? How much have I made? 100 million naira. And is it possible for that price to increase in 1 week? Yes. I mean, we've been in Nigeria. We'll see how it has happened. Are we getting this? So, in fact, it's all right. You don't know if I want to give you money now. You just change. Do you know that seeing dollar bundles give you some level of peace? Naira bundle can give you peace, right? Especially when it's new Naira bundles. Then imagine seeing new plated dollar bundles, $10,000. You will just be smiling. Nobody, life changer, okay? There's nothing anybody will do that will get you sad. You know, there's a level of money you have. When somebody wants to get you upset, you just look at him. You are not my level. But there's a type of way you won't have money. When somebody greets you, you ask yourself, did he greet me well? It's because there's no money, that's why. If there's money, you won't think that way. Are we getting this?
Yes, sir.
So for me, I would rather go for the dollar bundle than go for the naira what? I'll go for the dollar bundle than go for the naira bundle. It's very important we establish all of these things. Are you all following me? All right. So let's deal with spread now. Let's talk about what spread is. What is spread? What is spread? Very quickly, I would like you to take note of all of this. And these are all terminologies that you need. You need to understand this. Please take note of this. Every single phase of the class is like a stepping stone to what is coming up next. So if you don't understand the previous, it will be very difficult for you to comprehend the latter, what is to come. So please make sure you're taking notes and you're understanding. If you get back home, reverse through your notes. Do you understand? Go through them. Revise through them. All right. So the difference between bid price and ask price. So now what is spread? Spread is simply the difference between the bid price and the what? Ask price. Now what is the bid price? The bid price again is your what price? And what is the ask price? It's your what? So we can simply say the bid price is the difference between the price you are buying at, the spread rather, the price you are buying at, and the price you are also what? Selling at. That is the spread. So if I buy at $4 and the amount, if I'm buying, that is my ask price, $4, and the amount to actually sell that particular product for is $6, what is my spread in between this? 2. Are we getting this? So that is spread, the difference between the bid and the ask price. Now, when we go further in class, we're going to open our charts, like the Forex chart, where I will get to show you the bid price and the ask price as well, and how we get to use these two prices to probably make money off from the market. So please pay attention, follow through in the class, because this is going to be very insightful. All right. So let's look at this way now. What is our buying price right here? Please, can we all echo this together? What is our buying price? 1.1340. What is our selling price? 1.139. When we minus it, what do we get? 0.0006 spread. So this is even less than a pip or 6 pips. Are we getting this? The difference, just like this. If I'm buying at 4 and my selling price is 6, the difference is what? 2. Now let me give you in a literal form. What is spread? Like this is the calculation form, but what is actually spread itself? Now, you execute trade on our platform, right? For every trade you execute on our platform, you pay a very small amount to do that. Are we all together? Because we're giving you access to what? The platform. You pay a very small amount. It's just like using your bank. When you make some level of transactions in your bank, how much are you charged? 10 naira or so. I don't know how much the bank charges now. It's not that the banks are becoming thieves and they are doing ATM. ATM what again is it called? ATM management. They say they are managing your ATM card for you. ATM card that if you lost, I will go queue to collect another one. How are you managing it for me? They say maintenance, ATM maintenance. Don't maintain anything for me. I'll maintain my thing. There was a time my bank was charging me 400 naira every 3 days. I didn't understand why. I had to go to the bank and complain. I said, look at my distance. Why are you guys charging me this amount? Because imagine you move 400 naira here, 400 naira here, 400 naira here from over how many people? You know how much that is? Anyways. But nonetheless, there are still fees you pay to use certain platforms. How many of us watch Netflix here? There are fees you pay to watch Netflix, right?
Spotify.
Exactly. Spotify, you pay YouTube Music Go, exactly. So this is also a fee you pay per any trade you execute. But mind you, why is this not so much? It's simply because we are not charging you so much for this. Less than $0.6 is not up to $1. It's not even up to half a dollar. Are you getting this? This is why we have one of the best spreads. And one of the ways you get to know a good broker is by the what? Spread. Those of us who have traded before, there are sometimes you open a trade and you've opened the trade already, you have to beg for the trade, for the spread to actually cross over your trade for you to be in profits. Can be a very bad experience. So we don't have one of those issues. As you're entering the trade, you get to see how tiny our spreads are. We have one of the tiniest spreads, especially across major currencies. Very tiny spread. Have you checked our Go chart? How very tiny our spread is. So we don't charge so much in terms of spread. So if somebody asks you what is spread, can you define it clearly to the person now? The difference between your buying price and your what? Or the amount that you are charged any per trade you execute on a particular. Why are we not charging much? We have millions of users around the world. So imagine millions of users pay just less than $1 or less than even half a dollar to execute trade. Multiply it times. Do you understand? That's why we don't charge so much. And that's why one of the trusted and verified platforms. So this is what spread simply means. It's the amount you pay to execute trades or the difference between the bid and ask price. Now let's deal with something which is called PEEP, right, sir?
Yeah, this is a spread. Is it per each trade you enter?
Yes.
For example, if you enter 5 trades.
Exactly. So per each. Just
each of
per each. Now the funny thing about the spread is that you won't even notice. Are you getting this? You won't notice. Why is it that you won't notice? It covers immediately. So you won't even notice you are paying. After I traded for a very long time before I noticed I was paying any money for spread. Because it's a very tiny what? Very tiny fee. Very, very tiny fee. You're not paying so much for it. So now let's go to PEEPs, which is a very important concept in trading. Please take note of every one of these concepts, like I said, because we are going to be using every one of these as we're moving forward for the trades we're going to be executing. So what is PEEP? Now, PEEP simply means price interest points. Are we getting this? Can I repeat this again? PEEP simply means what? Price interest points. That is the meaning of PEEPs, price interest points. Now, let me give a literal example, right? If I travel from Lagos to Abuja and you are asking me the distance, you ask me the distance in what? In what, please? In kilometers. Am I correct? You be like, how many kilometers is from Abuja to what? To Lagos. If I walk from the end of this class to the other end, you ask me what is the what? The length. That's what you ask me, right? What is what? The length. That is what you get to ask me. What is the length? Now, why is this very important? It's simply because we make money when market moves in our direction after buying or selling. And market is almost always going up or going where? No. It's always moving in distance. Are we all getting this? So that is why we use what is called PEEP. So we can simply define PEEP as the increment or decrement of price from one point to where? Another. Do you get this? The increment or the decrement of price from one point to another. How price increase or how price decrease. So let's say Euro USD or dollar to naira was at point A at 1,000 or at 220 naira per what? Per dollar. Right? And it moves from point A down to point B. And B is now 1,400 naira per dollar. So what do we ask in the distance? How many what? How many words, please? How many pips? As the market move from where? Point A to point what? To B. So it's the price increment or decrement of price from one point to where? To another. Hope you all understand this. All right. I'm listening to you.
Is it safe to say that a PEEP is a sum of the different spreads?
No. It's not a sum of different spread because it's not a buying price or selling price. It's movement. It's movement. I'm going to show you a category. I'm going to show you clearly in the chart. It's like movement, price moving from one point to another, not spread in itself. No, when we start the practical section and I show you the spread, you get to understand. So just pen down the question in one point so that when we get there, you can answer that question. So is the increment or decrement of price from one point to where? Now, let's calculate this. Pips is normally valued in increments of 0.00010. We're going to calculate all of these things now. You see how we arrive at this. Now, let's say price moved from point A to point what? B. Let's calculate to know how many pips is the movement. This is important because this is how you get to know how much you are either making or how much you are what? Losing on a particular trade. So price moved from point A to point B. Now, let's calculate 1.2684. Let's put the first one because in mathematics, the higher number subtracts the what? Exactly. So the next is 1. What? 2683 what? Now, Let's calculate this today. Now, can you see that the smallest number numerical figures are very small? The last numerical figures are very tiny. Can you see this? It's tiny, right? This is tiny, right? Now they are tiny because they are called pipettes. They are called what? Pipettes. That's why they are very tiny. Now, what is pipette? Pipette is the smallest and tiniest movement in the market. I'll repeat that again. Is the what? Smallest and what? Tiniest movement in the market. Now, we have hour, right? If you are checking your time, we have the hour hand, we have the minute hand, we also have which hand? Second hand. But how many of you, when you're looking at the time, you actually check the second hand? How many of you check the second hand? You get this? Not everybody checks the what? Second hand. Then you know we have millisecond. Who will not take advantage of the milliseconds? That is the tiniest movement in what? So in between those seconds that is moving, there is still milliseconds inside of what? So how do you even measure that with your normal digital clock? Are we getting this? So it's not so important because it doesn't make any what? Impact. So because it doesn't make any impact, we keep it out. Yes, it make impact when it comes to rally race. When you want to get the different, maybe people arrive at the same, you want to get the different, it might make impact. But at this point, it doesn't make any impact. Are we getting this? Because it doesn't give us up to $0.25. So we take it out. So this is a pipette. So because it doesn't give us much, it's still equivalent to being what? 0. Are you getting this? So we can round it up to what? 0. Are we following? All right. Now the next one, 4 minus 3, what do we have?
1.
All right. 4 minus 3, we have 1. 8 minus 8.
0.
Are we all following, please? 6 minus 6.
0.
2 minus 2.
0.
Point. 1 minus 1. Point minus point. Okay, throw us 0. Are you all following me? So if we put this together now, we have what? 0.0001. That's why we say the increment or decrement from what? 0.00010. Now, why is this? Now, how do we arrive at 1 pip? Follow me. Pay attention. You might have questions to ask after explaining this. In mathematics, there's something called significant figures, right? And the significant figures are the non-zero digits after the decimal. Are we getting this? Okay. There is a digit that an odd 0 after the decimal. And guess what? Any 0 digit that follows the digit that is above 0 is also considered as a significant what? Now, what do I mean by this? In a normal numerical form, when I do 0, 0, 1, is it the same thing as what? The same thing as what, please? 1. So I can take this out and it's still what? 1. Are you following me? Now, when I do 1, 0, 0, is it the same thing as 1? What do we have here now? 100. So 100 is something as is different from what? 001. Now, why does this one make sense? Okay, let me put it in another clearer way again for us. Just a minute. Oh, come on. Let me put it in a clearer way. Okay. 0, 1 is equal to what? 010 is equal to what? 10. 100 is equal to what? Now, why is this? The 0 came out first, right? Is it significant?
No.
It's not. Significant 0 here? No. But can you see that the 0 following behind the 1 becomes what? Are we getting this? So in other words, these zeros, they are not what? They're not significant. Are you following me? So if they're not significant, what do we then have here now? What's the value we have? We have what? How many of us agree we have 1? How many of us agree we have 10?
We have 1.
We have what? 10. From what I just explained, what do we have, please? 10. So if we have 0, 0, 0, 0, 0, 0, 1, what is this thing? 1. 10, right? Now, we have 10 because there is a presence of the pipette. Where is our pipette here now? 0, right? So when pipette is added to the calculation, you call it point. So this is called 10 what? 10 points. When the pipette is added. Is this clear to you? So the pipette makes it 10 what? Point. But when we take out the pipette and leave it to stand alone, we then have 1 what? 1 pip. Do we get this? When the pipette is present, we call the value a what? Point. Point. When the pipette is absent, what do we call it? Pip. Are we all following this? Please, do you have any question? Is there anybody with any question? Kindly ask. If you have any question, kindly ask me so I give clarity. Because I need everybody to readily understand this. Because this is going to be leading us to the next phase. Where we'll pick trades, we'll open trades, we'll calculate our stop loss by ourselves, our take profit by ourselves, and we're going to fix it by ourselves as well. So, is there any question, please? Points. And when you take out the pipette, what is it then called? Pip. All right, we're all following. Online, is there any question? Okay, somebody said I should come again. You guys need to have questions because 500 of you here. You need plenty of questions. All right, let me come again. Follow me on this. Now, the person who said I should come again, I'll just try and break this down, but I don't know exactly where you are referring to. We're dealing with how to calculate all of these things. Can they see? Let's move from point A to point B. And we are trying to subtract to get point A. Now, look at the smaller figures here. They are called pipettes. And because they don't make any effect, they are like milliseconds. Because milliseconds does not have any what? Effect. Right? If I ask you the time, you won't tell me the time is 1 hour, 54 minutes, 30 seconds. The second is always running. Before you see 30, it has jumped. Are you following me? So it's not so relevant. So the pipette is just rounded up to what again did I say? Those in class. We'll turn the pipette to what?
0.
We'll turn it to what, please?
0.
0, because it doesn't make any what? Effect. So we turn it down to what? 0. Are we all following? All right. After turning the pipette to 0, right? And we've made our calculation. Now, we've made calculation from all of these things. And it comes out that the only significant value here is from 1 and to what? 0. Is the pipette still present?
Yes.
Present, right?
Yes.
So when the pipette is present, which is this 0, this 2, and this 1, we call it a what? Point. 10 points. Is this clear? But now, if we don't want to use points, because you hardly hear people use points. Only some people use points when they're talking about trading online. So when you hear 10 points, so that is how many people? So it's very hard to use points. So just to make it easy, just take out the 0 and we know that it is what? Pip, right? So if you take out the 0, what do we have? 1. 1 without the point is called what? Pip. Right? Are we all together? I want to ask us a question. I want to see our response very fast. So if this is what we have, it simply means 10 points is equal to how many pip?
1 point.
100 points is equal to how many pip? 1000 points is equal to how many pip? Very good. So that's the calculation there. And that is how we arrived at 1 pip. So 10 points is equivalent to what? 1 pip. 10 points is equivalent to 1 pip. Are we getting all of this, please? Is there any question? Now, those online, is there any questions still? Do you have any question, those who are online? If you have any question, kindly ask me. Just type it in the comment section, I'll give you a response. Any question? Those online, is there any question? All right, so you said you are good. Okay, I should start from the beginning. You have to join the next class, sorry. Okay, now you understand. Very good. So let's move further. So very quickly, those online, if you're not following this page, kindly put a follow right now so that you'll be notified whenever we come up live. And apart from being notified, you also get to be a part of our platform, which I'm going to introduce later. But right now, give a follow to this page if you want to be notified whenever we come up live again. Just follow the page right now. Give a follow. All right.
So you're calculating the spread now. The pipette will be added.
Sorry.
If you are calculating the spread.
The spread.
For instance, these two.
Yes, it's added. So you just know the difference. Yes, it's added. So the spread is just so that you know if a broker is a good broker or not. That's just basic. Because you may not take note of it when you are trading. And we're just showing you this because we're coming in the transparent manner to show you this is what we're offering. And we don't charge you any of this thing. That is why we're explaining that. Many platforms do not explain what a spread is. In fact, how many brokers do you meet that will tell you what a spread is? Very good. All right, can we move further? Both those in class and online, can we go further? Okay. So those online, can you give a follow? So that is when we have arrived at this. 10 points is equivalent to what? 1 pip. And remember, 10 points is what? 100 points, 1,000 points. Is it clear to us? Do you have understand this? Are we sure? All right, let's move further. So now we have lot size. Let's deal with lot size. Let's deal with lot size. Please, just a minute. All right. Now, lot size. Lot size. What are lot size? Now, take note of one of these things I'm teaching because we are still going to marry everything together. I'm going to marry everything together for you. So it makes sense. And why these are very important as well. So just keep taking note of them. But I hope so far we are all understanding what is being taught, right? You understand? Yes. Okay. Now, trading are done in specific lots, which are called what? Specific units, which are called what? Lots. Lots. All right. Anytime I come to this part of lots, do you know where I remember? Lot and his wife. All right. Okay. Called lots. Now, what is lot size? Take note of this. Lot size is simply the percentage of your account. The percentage of your account that you are choosing to invest on a particular trade. Is it clear to us? Again, what is lot size? Lot size is simply the percentage of your account that you are choosing to invest on a particular what? So this simply means sitting in my account might be $1,000, but from this $1,000, the only amount I'm interested in investing is how much? $100 per trade. Are you getting this? Now, this is a market that keeps you in control. And let me tell you something that's very important. Any investment that somebody asks you to invest that you are not in control of is a very bad one. Are we getting this? Yes. It's a very bad one because you can't determine the risk. You can't determine your profits as well. But when you are in control, it's a very good investment because you can control everything that happens with that particular investment. So in any investment you do, make sure you are in control. And that's why in PU Prime here, every one of your trading, you are in what? You decide how much you want to put on a trade. You decide when you want to withdraw. You deposit when you want to deposit. Nobody is influencing you on any of this. And that is why we're a very transparent platform. You are simply in control. Tomorrow, if you say you don't want to trade again, you are still in what? Control. All right. So, like I said, you can have $1,000 as your capital. And even in the midst of this $1,000, how much are you investing in it?
100.
On each trade, $100 in each trade. I think last week I did an example of us how you can make money while we flipped the ATM card. How many of us were in class? All right, we're still going to do that on Thursday. So you see that it's not luck, it's actually fact. If you follow what I show you, if you follow what I'm teaching you, you're definitely going to come to a point where even though it's $1 you make, you come to a point where you make money from the market. Are we all following? All right, so we have 3 types of lot sizes. Number 1, we have standard what? Lot size. Number 2, we have mini what? And number 3, we have micro lot size. Number 1, standard lot size, mini lot size, and lastly, we have micro lot size. We're going to be looking at what each and every one of these lot sizes are. So what is a standard lot size? Very quickly. Now, standard lot size simply means you are buying 100,000 or selling 100,000 units of the base instrument. But don't get yourself confused with this. This is what I simply mean. Standard lot size goes from the range of 1.0 to what? 200. That simply means if I put 1.0 on the platform, I'm going to show us how we can do this on our platform. Don't worry. If I put 1.0 on our platform, each trade, how much am I making or losing? 10 what? $10, 1.0. So each pips, how much am I making? We just learned pip now, right? The distance in price. Are you seeing how everything is now coming together gradually? So if from here, if from this wall to this place is 1 pip, and I use a standard load, how much have I made?
$10.
Clear. If from here to here is 20 pips, using a standard load, how much have I made? If from here to here is 30 pips, using a standard load, how much have I made? So can you see how the movement of the market in pips and the lot size you use is what determines how much you are going to what? Is you all aligning? Are we all getting this, please? So as the market keeps moving in your direction, what is happening to your money? It keeps what? Increasing based on the lot size you use. So a standard lot size begins from 1.0 to what? 200. So when I use 1.0, each pip movement, how much am I making again? Now let's do something else. Let's imagine I use 5.0. Each pip movement, how much am I going to make? I didn't get a response. 5.0. Each pip movement, how much am I going to make? How much? If you agree with $50, say aye. Aye. If you disagree, say nay. Okay, guess what? If I'm in the Senate house, when they say aye, I will shout aye. When they say nay, I also shout nay. If they say, where do you stand? I stand in between. Do you understand? Now, follow me on this. If I use 1.0 lot size, I make how much? $10, right? Are you following me? 1.0, how much do I make? $10. Then I choose to use 5.0 lot size. How much are we going to make? Is it clear to us? Are we understanding this? Now let's imagine I use 10.0 lot size. It's still on that word? Standard, right? How much am I going to make per pip move? $100. What happened? Are you getting the capacity in trades? Yes. So what if I now use 10.0 lot size and the market moves 10 pip in my favor? How much have I made? I used 10.0 lot size and the market moves 10 pips in my favor. How much have I made? $1,000. Very good. We're all following. Are you getting this? So from 1.0 to 200 is what kind of lot size? I'm not saying open your account and just open 200 lot size. Oh? Exactly. You know, as you are opening the lot size, they start beating village drum for you. Welcome back. Welcome back.
So 100.0 is 1,000.
Exactly, per pip.
Okay, should we say that people have to move in 10 places?
Exactly, for you to make the amount. It's clear now to you. That is now the 10 places is now called what? Pips.
Is it possible for it to move anything less than the 10 pieces?
Yes. It has to move from 1 pip to 10 pips. It has to move from 0.01 pip before it gets to 10 pip. Definitely. And it can move.
It can be 2, it can be 3.
It can be 3, it can be 4, it can be 5. It can be anything. It's price. It's figure. So it can move from 0, 1, 2, 3. It's figures.
So it's
All right, man.
on that case, 0.1 is
When I get there, I'm coming there. So the next we have is called what? Mini what? Mini what, please? Lot size. Are you getting it? So after this class, you will now know your account size and the capacity of lot size you should what? You should use. So that you will not carry keke and put trailer on top keke. What will happen? It will just crash it down.
So, what of like 100,000 units for the standard lot?
The standard. Now, the unit is just telling you the quantity. So we're buying units. Sorry, just a minute. Can I come again? All right. This person that is only saying I should come again. Please, from what angle am I coming again? All right. Sorry? Someone said something?
She's telling you the angle you come in right angle.
Oh, right angle. All right, now let me re-explain again for those who didn't get clarity. Now, we have lot sizes, right? I clearly established that, sorry, lot size is simply the percentage of your amount, rather, you are choosing to invest on a particular trade. Those online, please follow me. So we have a lot of trade. A lot of trade. You can take 1,000 trade in a day. Are you getting this? But you can also determine how much you are putting in each of the 1,000 trade. So I can have 1 million naira in my account and just choose to invest 100,000 naira. So lot size is what helps you to determine how much you are investing. And it's also what determines how much you are going to make from your what? Investment. Are you getting this? So that is simply lot size. And I said we have three types of lot size. Well, we have the standard lot size, the mini, and also the micro lot size. I established this. And I already told us what the standard lot size is. So don't get this to confuse you. This is a deeper explanation. I don't want this to confuse you. But just get that a standard lot size on the trade platform, because we're going to practicalize that in class, starts from using 1.0 to what? 200 lot size. Please follow me, the person who is asking this question. Start from using 1.0 to 200 lot size. Now, what does this simply mean? It simply means anytime I use 1.0 lot size, how much do I make? $10. So, per pip. If I use 1.0, each pip movement I make how much? $10. And because I'm using a standard lot size, right? And standard lot size begins from 1.0 to 200. It simply means if I use 10 lot size, it still falls under what?
Standard.
If I use 50 lot size, still falls under what? If I use 150 lot size, still falls under what? Down to what? 200. The moment you start going beyond 200, you are now a hedge fund and you should stand on your own. Okay. You should stand on your own then. But we get in this place. You know, the people that are called whale of the market. When they open position like this, just follow them behind. All right. I hope we're all following this. So this is standard lot size. So each pip movement, using a standard lot size, you will make how much? $10. I think this place is becoming a little bit hot. Let me tell them to put on the AC. Okay, thank you. All right. So the next we have is called a mini what? Mini lot size. Are you all following me? So what is a mini lot size like I was explaining? Mini lot size begins from 0.1 to what? 0.9. Remember when we cross from 0.9, when I enter what? And when you enter 1.0 is already what? Standard. Very good. So it includes using from 0.1 to 0.9. Are you all following me? And when you use a 0.1 lot size, how much are you making per pip movement?
$1.
One what? $1. Are you all following me? Using a 0.1 lot size, you make $1 per what? Are we writing these things down because we're going to practicalize this? All right. Now what happens when I use 0.5 lot size? Each pip movement, how much am I making? $5. Are you all following me? If I now use 0.1 lot size and the market moves 20 pips, how much have I made?
$20.
Very good, $20. What if you move 2 pips? How much have I made?
$2.
Very good, we are following. Are we all getting this?
I have to say, every movement is rated $10.
Yes, that's standard lot size.
Standard.
Using 1.0.
No, okay, if you are using the
Standard is 10. This one is
no, I mean the movement now. The movement is in peak. But so every peak movement is in $10. Multiply by your lot size.
We'll come to that. We'll come to that. It's same thing. We'll come to that calculation. We'll come to that, so that will give you clarity.
yes. The lot size that come first to determine
We'll come to that.
the pips value.
So it's your lot size actually that determines your pip value. So this is, now let's do it this way. Now look at this. Standard lot size 1.0, right? 20 pips is how much? $200, right? Now, 0.1, right? 20 pips is how much?
$20.
Can you see it's the same how many pips? How many pips still? 20 pips. But what determines the amount that was produced? The lot size. So it's the lot size that determines the amount you make in terms of pip movement. If you're using $100, okay, I mean, you can, any loss that you want to use, it's you that will decide now how much you're willing to risk. I can put $100 and decide to risk all of it.
So, sir, what you are saying is that if I'm investing $200, that's when my
No, I'm not saying if you're investing 200. This is just how much you will make or lose when you use 1.0 on it. You're going to put money in a trade now.
yes.
Exactly.
So if I put in $200,
And you want to use 1.0.
okay, I will decide.
You will decide how many you want. Exactly. You might choose to risk 0.
So is the risk
Exactly. That's what it is. Exactly. Is it clear? All right. Can we move further? Don't worry, if this is your first time, the class might be a little bit confusing. Over time, you begin to get clarity. Okay. So each pip movement, how much are we making? Using what kind of lot size? Mini. Now, what happens when we use micro lot size? Using a micro lot size, how much do you? Micro lot size begins from 0.01 to how much? 0.09. Per pip movement, how much do you make? 0. What? 0.1, that is 10 words. Small money, right? But this will save you if you are just starting your trading journey. It will save you. Now, those online, is there any question? And remember, if you're not following this page, make sure you give a follow. Because after giving a follow, probably in the midst of the class, I'll tell you how you can get added to our online community so that you get to join us, you get to know how we trade, because I'll be organizing a special 4 days active trading class on that community. So just stay on the live to the end. And apart from staying on the live, make sure you give a follow to this page so that you'll be notified anytime we come up live. Make sure you give a follow. Are we all together? So do you understand this now? All right. Now, how do we know how much we're going to lose or make on a particular trade? Now, let's go straight into this. Daniel, can you please call Kehinde for me? Tell him I'll need him now because we're going to the practical side before Bishop comes to explain some software terminologies. Sorry, ma. Yes, I'm listening, ma. Yes, no.
No, if you can make it $2, 0.1 times 10 is 2.
We'll come to that. I'll show you. That's what I want to show you now, so you get that. Are you there? So how do you calculate how much you will make or how much you are going to lose on a particular trade? Are you following me? We have the formula lot size times what? Pips. Now, the pips, either how much you are gaining if it's going in your way, or how much you are losing if it's going against what? So plus or minus. Times what? 10. This 10 is a constant. The 10 is a what, please? Constant. So now, can you recalculate using this formula and see how much you're going to make? Can you recalculate? Can you see now? So this is how you get to know how much you're going to make or lose on a particular trade. So, can I ask us a question? I'll quickly calculate it to tell me how much you're going to make. I've opened a trade now using a lot size of 0.25. Everybody? I just opened a trade now. Calculate it. Use your calculator. I just opened a trade using a lot size of 0.25. So when it comes to formula, you take the values and you multiply. So 0.25 is my lot size. And the market has gone 50 pips in my favor. Times 10. How much have I made? 100 and what? Very good. $125. Do you know how many of us arrive at this value? 125. If you didn't arrive at it, you didn't follow my formula.
You times it by 10.
0.25, my lot size, multiplied by how many pips? 10. And remember, the 10 is a what? How much have I made?
Because it gives you 12.5 times 10.
Do you get that now, sir? All right. Are we all together? This is very important so that you know how to proportion your risk and so that you know how much you are trying to risk on each trade you are picking. Are we all together? Can I move further? Another one now. You calculate this one by yourself. I opened a trade using a lot size of 0.06. Now 0.06 is what kind of lot size? Mini, standard, or micro? Pause. 0.06 is what kind of lot size? Micro, right? So I opened the trade using a micro lot size of 0.06. So on this trade I opened, I made a profit, or rather I lost on this trade. Let's say I lost 60 pips. How much have I lost?
How many pips?
60.
You lost $30.
30 what? You forgot to multiply by 10. I lost how much?
But we are micro.
You still do the 10. The 10 is a constant for all.
Oh, okay.
0. What? 36 what? Dollar. Are we getting this? Now one more time. I choose to open a trade using a 2.35 lot size. 2.35 falls under what type of lot size? Standard, right? So I open a trade using a 2.35 lot size with my take profits, that is pips now, being at 32 pips. How much have I made? How much have I made? We'll do the practicals.
748.
How much did I make? Okay, now those online, how much have I made? All right, 752 what? Very good, very correct. I'm glad that we're all following. Okay, $752. So are we ready to practicalize this? But before I go, we're going to practicalize this before we call on next person to come and speak. When it comes to trading, how do you trade? How do I trade? What is the proper way for me to trade? Now, when it comes to trading, this is how you trade. You trade using an entry, a stop loss, and a what? Take profit. I repeat that again. And what? A what? A rather. An entry, a what? Stop loss, and a what? Take profit. So what is an entry? An entry is simply the price you are choosing to execute or open the trade at. An entry is simply the price you are choosing to execute or open the trade at, right? You must buy at a particular price, am I correct? So that is the price you are buying at. Now, what is your take profit? If I buy a product, I'm expecting that the price should increase for me to what? Sell, right? So take profit now is the place I will put I'll tell my broker that when the market gets to this point, close my trade in what? In profits. Is this clear? Is this clear? So you are the one to calculate your take what? Profits. We're going to do all of this in class. What is my stop loss? Now, the purpose of helmet, right, is not so that you should have accident. Am I correct? Is that the purpose of helmet? Do they tell you to put your seatbelt so that you have accidents? No. It's just so in case it happens. Are we getting it? So it's the same reason why we have the stop loss. In case the trade does not now go in my direction and it happens to go against me, a stop loss is put in place so that I don't lose so much. I lose very what? Very minimal, very little. Are we following? So that we lose very little, so that we don't lose so much. That is the purpose of a stop loss. So a stop loss is meant to limit us from risking so much. So when we use stop loss, it reduces our losing factor, so we don't lose so much. Can you say that? I'm not telling you won't lose money sometime. Is that what I'm saying? You will lose money definitely, but I'm showing you how to manage your losses so that it doesn't what? Doesn't choke you. You know, say it choke. It doesn't choke you so that it should not choke for you. Are you all getting this? All right. Now, how do we adjust this? Now, whenever we buy, now this is a buy entry, right? Can you see? This is a buy what? We are buying, anticipating that the market will go here. So when we buy, we want the market to go here. If the market go down, is it going in our favor? No. So where will our stop loss be? Down, below. Are you getting it? Because we are what? So anytime we buy, our stop loss will be where? Below. Our take profit will be where? Above. Anytime we buy, our stop loss will be where? Why is it below? So in case the market does not go up as we want it to go, if it goes below, it will take us out in small words. Can you see we're losing small here compared to how much we're making? Purpose of stop loss. Are you all following me? All right. So when we buy, our stop loss is where? Below. Our take profit is where? Kindly write this thing down because we're going to practice. It confuses people a lot whenever we're practicalizing. When we are buying, stop loss below, take profit above. Stop loss below, take profit above whenever we choose to buy. All right. Stop loss below, take profit above. All right, in case somebody is asking some questions, all of these questions are going to be treated in the group. I'll be adding you guys to. But for now, make sure you give a follow. We have close to 400, over 400 person here, yeah? So make sure you give a follow. Give a follow. Just follow this page. In the midst of the class, I'll be telling you the group to send the message to so that you are added to it. And I'll be able to educate. I'll be having, like I said, I'll be having an intensive 4 days training on that group. Very soon. I'm already running this thing for it. So when it's ready, I'm going to be having those training. So make sure that you are added to the group. I'm going to show you the link to the group shortly. All right. So just hold on a bit. I'm going to send a message to the group. Or rather, if you want to be on that group, listen to me out. Those who are online, you want to be on this group where I'll be organizing this class, send TikTok to 08061739229. Are we all following? Those of you who are online. Like I said, I'll be organizing a 4 days special training on this group where I'll be training and teaching people how to pick trades from the market. So kindly send TikTok to 08061739229. I'm going to call the number again. Send the word TikTok. Send the word TikTok to 08061739221. So just send TikTok to that number and somebody is going to attend to you shortly. Someone is going to attend to you shortly. Send TikTok to 08061739229. I did set up a poll there, but I'm going to be sending out the poll one more time in preparation for this class that we'll be holding. Like I said, it's going to be a special class, 4 days intensive training. I'm not just going to be teaching the class. I'll be giving some tools for free that you can also use for trading. That is to the very serious attendees in the class. It's WhatsApp. What is not on WhatsApp? 08061739229. 061739229. Add the contact first before you try and send message to it on WhatsApp. Anybody found it on WhatsApp now? But those in class are not supposed to join though. But Just to confirm that I'm not calling the wrong number, have you all found it? Anybody have seen it on WhatsApp? You have seen it on WhatsApp, right? Let me see the picture showing there.
No picture here, but it's PU Prime.
PU Prime NG, very good. So 08061739229. Send TikTok to that number right now, and you'll be added to the group. Make sure you do that right now. Make sure you do that right now. Like I said, you don't want to miss. The class is for free. Nobody's asking you to pay anything. Nobody's asking you to pay anything for the class. It's simply for free. So you'll be taught all of these things in that particular class. So whenever we are buying, our stop loss is where? Below. And our take profit is where?
Above.
Are we all getting this? All right. Are we all together? Then what happens when we are selling now? Whenever we are selling, where's our stop loss? Stop loss is where?
Below.
When we are selling, our stop loss will be where?
Above.
Take profit will be where?
Below.
Where? Because when we are selling, we want the market to come where? And if it fails to come down, it simply means it's going against our what? Direction. Are we understanding this, please? Are we sure? Are we sure you're understanding this?
Yes.
Please, if you're not understanding, ask questions. That's the purpose of the class. Kindly ask questions if you need clarity in any area. All right. Now let's move further. I'm going to talk of leverage later. Can you see we are selling now, right? Where's our stop loss? Where's our take profit? Below. Is this clear? All right. Now we have two types of markets, bears and bull markets. That is why we either buy or we what? So what is the bear market? Now, the bull and the bear. Why do we normally use this? Because someone is asking, why are we using animals to describe the type of what? We can use something else, right? Now, why do we use animals? Now, we're using animals to depict the fighting pattern. Are you following me? Now, have you seen a bull fight before? Have you seen a cow that wants to fight? What does it normally do? It lifts from the down and what? So a bull market is a market that comes from down to go where? Are we getting this? But have you seen a bear fight before? Probably on video. Or have you seen dogs fight before? They don't fight in where? They bring you from the air to where? Are we getting this? So it is simply meant to depict their fighting pattern. So a bullish market simply means a market that is going up, and a bearish market simply means a market that is going where? Is it clear? That is why we have bulls and bear markets. Sorry? Sorry, I didn't get that.
So what does that mean?
What does it mean? That's what I'm saying. A bullish market is a market that has been dominated by buyers. So in a bullish market, a lot of people are buying. In a bearish market, a lot of people are selling. Is that clear now? In a bullish market, right? A lot of people are buying. Yeah, that is a buy market. A lot of people are selling. Are we getting this? So bullish market, a lot of people are buying. Bearish market, a lot of people are where? And if a lot of people are buying, where will the market go to? A lot of people are selling, where will it go to? All right. So now we're going to be learning how we can pick trades. How many of us have, don't worry about this, how many of us have an active trading account right here? Open your demo is already logged into your PU Prime account. Ken, this is what I need you now. It's already logged in. Please let me see your hand because I'll need everybody to do that. Your demo is already logged into your MetaTrader 4, MetaTrader 5. All right, let's put, if yours is not logged in, just indicate so that somebody attends to you. You've not logged in yet? Do you have a demo account?
Yes.
Any other person? Your demo account is not logged in on your MetaTrader 4 or 5? So, I mean, if yours is not logged in, it's just logged in? All right. Yours is not logged in. Okay, his is not logged in, I think. So if there's any other person here, can indicate, because we want to do a practical on this right now, where we are going to pick trades. Now, one more time, while we are doing this, those online, if you want to open a platform, don't worry, just hold on right now. Hold on right now. We're going to add you to a group, those of you online, where you will be taken through on the procedure to open an account so that you don't open a random account. You'll be taken through a procedure when you do this. Yes, the app can be downloaded anywhere, whether in UK, whether in Canada. If it's not downloadable, then just use the web download browser. But don't worry, we're going to be adding you to a group. Just send TikTok. If you are not yet on the group, just put a yes first. Put on a yes if you're not yet. Yeah, in China, wherever you are around the world, you can open this. If you're not yet on the group, put on a yes. If you're not yet on the group, put on a yes. Let me see the yeses. All right, so a lot of us are not yet on the group. Very good. I'd like you to send TikTok to... Oh, it's all right. It's all right. I can see that a lot of you are not on the group. Don't worry, you'll be added to the group now. Now, firstly, make sure you are following us. That's a very important thing. Make sure you are following this page so that you get notified whenever we come up live. Follow this page so that we get notified whenever we come live. So make sure you follow the page. Make sure you follow this page right now. So if you are not following the page, send right now. Send TikTok. Do this right now, please. Send TikTok to 08061739229. Very good. Send TikTok right now to 08061739229. Like I said, I would like to have an intensive training session with all of you guys. So please make sure you're in that group. It's going to be a 4-day trading section. Within these 4 days, you'll learn how the market works, how to pick trades, how to execute trades, and this will help you in the longer run to become not just a profitable trader, but will teach you how to make money off from the market. The name of our app is called PU Prime, but like I'm saying, send TikTok right now. Do not go to the app right now. On that group, we're going to give you a guideline on how you can go through our platform or the app to get all of these things done. But right now, just send TikTok to 08061739229. Now, I'm giving time for those in class here who are not on the platform to get on the platform. 081. Don't worry, when I start, the noise will reduce. Don't worry. The reason why I'm permitting it is because I'm doing this. So when I start, the noises will reduce, obviously. So 08161739229. Send TikTok right now to that number, and we'll be out there to give you a response. Send TikTok to the number. All right. Now let's. Is it almost done? All right. So we'll just click the demo. We'll log into. You have MT4, MT5 on this account. Okay. Great. So Candice is going to take you through the process. All right, now those of us who are right there, open your chart where you can see the charts clearly. I'm going to be taking you through some procedure. Now, can you see the first icon that looks like this? Please give me a minute. Just give me a minute, please. All right, you see something that looks like arrow like this on your MT5 or MT4. Can you see this? Can you see that? Just when you open it, you see an arrow that looks like that. On the right, bottom. Bottom. So tap on the arrow. On the bottom. Bottom left. Bottom left. You see the arrow. Very good. Tap on the arrow. Very good. Tap on the arrow. On the bottom left of your MT5 or MT4. Okay, you're trying to log in, right? So... Do you need any guidance or any assistance? All right. So just tap on the arrow. Are we out there? All right. So when you tap on this arrow, you can see a lot of currencies, right? Now, this is how you decide which market you want to buy or which market you want to sell. You can see Euro USD, GBP USD, USD CHF. That is how you get to determine, oh, this is what I would like to buy, or this is what I would like to sell. Now, in case you don't see what you want to trade right there, click on the plus icon. Look at the top. You see a plus icon. Look at the top. You see a plus icon. Can you see the top? How many of us can see the plus icon on the top? All right, click on it. Click on the plus icon. Click on the plus icon. Now, on that plus icon, you see find symbol. It's written there. On the find symbol. So now that is how you get to type. So let's imagine you're looking for Euro USD. You just type Euro USD there. I just say imagine. It might be on your chart already, so you may not see it. That is how you get to add up whichever currency pair you are interested in trading. Now, I'd like everybody to go back to the place where we just came from, where you could see a lot of those currencies moving in red and black. All right, are we all back there? No, go back now to where we came from. Where we came from. All right, very good. So go back to where we came from. You are all there, right? Okay. Now, look at the icon next to it that has something like this. Chart. You see it's written as charts. Look at the icon next to it that has charts written on. Have you clicked on it? Have you clicked on the chart? So you can see a lot of things moving, right? All right. So this is how we get to analyze, get to pick trades, how we get to see that the market is either going up or coming down. We use that particular area to see all of these things. Now, those of you online, don't be lost, please. We are coming back shortly. So, like I said, just send TikTok to 08061739229 and you get added to the group where you can go through this process. All right. So, the chart angle is where you get to analyze, where you get to pick trades, where you get to look at what is happening on the markets. Now, on the chart angle, I'd like us to take us through something. Tap on the screen. Just tap on an empty screen on your chart angle. Tap on the empty screen. Can you tap on the, you see a cycle appear that has a lot of numbers. Just type on the empty screen. Can you see that? You can see M1. You can see H2, H4. Now, those things are time frames. Are we all following me? They are time frame. Now, what does this simply mean? Now, click on it and click on H4. Whatever currency you are, it doesn't have to be the same. Just click on that. I click on H4. Have you all done that? Click on that and click on H4. Okay. Now, doing that, what does this simply mean? It simply means each one of those candlesticks you are seeing, now those things you see that are red and green or red and blue, whatever color, they are called candlesticks. Each one of those candlesticks took 4 hours to open and to what? Are we getting this? So each one took 4 hours. So if we have 2, that is how many? 8 hours. Took 4 hours to open and to close. Each one of those candlesticks. Can you see that? Now tap on it again and click on M1. I want to show us something very quickly. Tap on this, tap on the screen again, you open that cycle. And after doing that, click on M1. Click on M1. Are we all at M1 now? Are we all there? Can you see 2 lines? One is red, one is blue, or one is red, one is green. Can you see them? Very good. Now that is your bid and your what? Ask price. That is your bid and that is your what? Can you see the 2 lines? Look at the 2 lines now. Yes. So that is your bid and ask price. And remember, the bid price is a trader's what? The bid price is a trader's what? The ask price is a trader's what? The bid price is the trader's what? The bid price is the trader's what? The ask price is the trader's what? Very good, because when you go to the market, what do? You ask in order for you to what? Buy. Do you get the correction now, ma? So the ask price is your buying price. The ask price is your buying price. The bid, now the green price, the one at the top, is your buying price. That is why it's at the top. The one at the top, the price at the top. It doesn't have to be green or red. It could be different color on different platforms. But look at the price at the top. That is your buying price. Just look at the upside. Which price comes first?
Where? We have them like
Which one is the first one?
this last one.
Look at this. These
Yeah.
are the two lines now. So which is the first?
Okay.
Obviously this. If you are going down this way, exactly.
Oh, okay.
So the bid price is your buying, your what? Selling price rather. So the ask price is your buying price. So look at the first price on top. The first price you can see, that is your buying price. The second price is your selling price. I'm just showing you this so that you understand what I explain as spread. So spread again, we said is the difference between what? The bid price and the what? And you can see the prices, right? You can see a gap in between them. So in between those gap, your chart is not loaded, sir. Check if you have the airtime or data. It's not loaded. Look at that middle gap in between them now. Look at the two lines. Can you see something in between them? Yeah, those space in between them. It's called the spread. Look at the one on the top. That is the axe. Because that is the price you are buying at. The top is the axe. Because when you buy, that is the price the market opens the trade at. The down one is the bid.
What you just said now is for both buying and selling.
How?
When you put selling, you are saying
The price at the top is your buying price. The price at the bottom is your selling price.
I'm still confused, very confused.
How do you read the charts? This is the price at the top now. Can you see this? Is this one? Will you say this one is on top this?
No, the red is on top.
Exactly. So that is the price you are buying at. So if you open a buy now, the buy opens at the top line.
Yes.
If you
Okay,
open
so
a sell, it opens at this bottom one.
So what I'm saying here now, the buying is 1 point something something.
It's not. That is the market moving. Market is always moving.
Okay.
That's why it's moving like that.
So where is the price now?
The price now. The price is in between. Look at the buying price. 1 point what.
Yeah.
It will keep moving. The market is always moving. Look at the selling price. Can you see? All right. Kende, can we please get a sheet of paper for attendance? Hope you're all following me. So the line at the top is your buying price. Line at the top, buying price. Why is it line at the top? When you open a buy, it will open here with the line at the top, exactly. Then the line at the bottom is your words. Or if you open a sell, it will open here. The line at the bottom. Are you all following me? All right. So I just wanted us to see that. We have seen the time frames now, right? We've seen that. So what is the next thing we want to see from right here? All right, now let's look at the icon that looks like this at the bottom. The icon that looks like that. Can you see it?
Yes.
Open the icon that looks like that. That is straight. It won't be the same. It's different. The terminal is different. The bid and ask price. All right. So I want to show us bid and ask price, those online, but this is just having one price. It's not having the both.
PU Prime Portal show it.
Oh, open the button. Okay, so have they been unmuted? All right. So those who've been asking, or those of you online, this is the spread. You can see the price. This price here is your buying price. 158.99. This price here is your selling price. So when you buy, it's always moving, just so you know. When you buy, the buy opens at this green price. When you sell, it opens at this red price. Are we all getting this? So that is the buying and selling price.
So that means that at this point in time, it's not good to buy.
Why?
Because of the, I'm seeing the price now.
Price will always move. That's why it's market.
And for now, if I buy, it means I can't sell now. That's the point I'm trying.
No, your analysis will tell you why you should buy or not. You don't just buy like that. That's why we have AI tools. We have analysis that shows you buy. You can buy and sell at any time, but you need something telling you buy now, or sell now,
So
or
the
don't
selling
buy.
is
It's not selling. Don't mind what is happening. It's just don't worry. This BTC USD, right? This USD JPY rather. Yeah, JPY. All right, can I continue? Are we all together? So now I want to learn how to pick a trade now. Now, go to this first thing I drew out where we had this and we had that. Quickly go to that. We want to quickly do this so that we'll move on to the next session after 5 minutes. Or do you want to handle this? Okay, just handle this. Pick trade. How to pick trades. So I want to pick a trade now. So we're going to the terminals as we're speaking about it. Alright, so like I said, open this first place that we open first. This one is not empty file. Go to empty file. This way. Click on what I see this way. Just look at what I do. So click on it. Look at quotes. Turn your listing like this. No, don't worry. That's why I say don't worry the color. Just focus on which one is up or which one is down. So it's not the color that matters. The price at the top is the buying price. That's why it's at the top. The price at the bottom is the selling price. That's why it's at the bottom. So Kende is going to give us clarity on how to buy and sell. He's going to explain that to us. You can use MT4 instead. The MT4 instead. Look at it now.
It's done.
Yeah, you can use that. I think that might be easier for you. Alright.
Okay. Yes.
Let me make your conditions. So Kende is going to show you how to buy and sell.
Okay. Okay, so we'll just continue from where it stopped. I believe by now all of us can check currencies on our MT4 or MT5. So let's do this. Let's pick GBP USD. GBP USD. Just go to quotes. Go to quotes, look for GBP USD. If it is not there, the plus sign. Now let me explain. If you cannot find GBP USD as part of the currency pairs that shows under the list, if you go to quotes, it's going to list some currency pairs, right? Yeah. Now, if you check there and GBP USD is not there, now you are going to see a plus sign at the edge. That will be like the left, right? Or by right, if you are looking at your phone, that will be right. So click on the plus sign, then search for GBP USD. So it's going to bring to the one GBP. That's Great Britain's pound. USD. Can you see it there? Now the one that has .x.
Yes.
Click the plus sign. The plus sign means you are adding it. So if you have done that, go back again to the quotes. Then scroll down. You are going to see it added to the list.
.s.
The one with .s. That's the one you can trade. If you search for GBP USD, it's going to bring two. Now the one that has .s, that's the one you should add. The add is the plus sign. Click on the plus sign, it will mark it. Once it will mark it, go back to the quotes. Then scroll down. You are going to see that the one that you just added is going to be at the last or the base on the list. Now press that pair. Press that pair, that GBP USD. Press it. Then you are going to see chart. Then press on the chart. I want all of us to be together. What I've explained so far, is it clear? Yes, that GBP USD. Click on it, like press it. Then it's going to bring out some things. Then press on chart. That will be number 2. Then it's going to give you something like this. Now that is how you can search for any currency pair that you want to look for or that you want to trade. I hope that one is clear. That is clear, right? Okay, now go to trade. You can see trade, right? Now if you see trade, You are going to see a plus sign at the edge by the right as well. Trade. If you click on trade, hey, sorry, sir. Oh, sorry. Probably just change your seat. Just change your seat, sir. Just change your seat, sir. Okay. Now, if you click on trade, now you're going to see a plus sign at the edge by the right. Now click on that plus sign. Beside the two arrows, yes.
We should click it.
Yes. If you click on it.
Okay.
Now, if you check the left side, it's going to show a particular currency pair. Now, it may not be GBP USD.
Yeah.
Now, AUD what? AUD card. Now, how do you change it? At the right side again, you are going to see something like a sign of a dollar. Now, click on that. Now, if you click on that, you are going to see that it's going to bring different currency pairs again. Please, anybody that is not getting this, just call me back so that I can retrace again. If you click on trade, you are going to see at the edge by the right side, you are going to see a plus symbol. If you click on that, you are going to see many currencies listed. Now, the one you want to do at that time, look for it and click on it. Now, we are using GBP USD as an example, right? So look for GBP USD there and click on it. Okay. So once you click on it, it will bring you back to somewhere like this. All right? So you are going to see market execution. If you click on market execution, now you're going to see buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. Now, all those ones also have their own rules that we'll not really be going into for today's class. Now, market execution means that you are ready to initiate a trade right now, whether it is to buy or to sell. Are you getting it? Now, buy limit, sell limit, buy stop, sell stop. They are what we call pending orders. Now, let me just do a short explanation of that. What we refer to as pending orders is, okay, I'm already looking at this pair. So it's at a particular price. Let me say, let's say this is the current price, 1.0241. So I believe that it is still going to go up to like maybe 1.0261. I now believe that the moment it gets here, it will start coming down. Are you getting me? So I can place a buy limit here. Then once it gets there, it will now start coming down. Do you get it? But if I want it to just, once it gets to this point, I want it to now trigger my trade to start buying. That's what is called a buy stop. Are you getting me? But again, that's not really the focus of our class today, because I mean, everybody wants to trade in lifetime at the moment. So when we get to the advanced technical class, we explain how we can plan a trade and just put it there, so that once it gets there, even if you are not there, it will trigger on its own. So now, if you go to market execution, just click on market execution. Now, if you go down, you are going to see, you are going to see two different prices that is changing, right? That is the bid and the ask price. I believe he has already explained that. Now, you are going to see SL. Can you see that? That's your stop loss. That's your stop loss. SL. Just underneath the bid price. Here now. Is it not something like this? Click on market execution. I already said, click on market execution. If you now click on it, now if you look down, below, you have seen the bid and the ask price. Under the bid price, you are going to see SL. Abi? This is SL. And you're going to see TP under the other price. Now, SL is the stop loss, and TP is the take profit. So, that means now, he explained earlier that if you are buying, our stop loss is where? Is below, and our take profit is above. If you are selling, our stop loss is where? Above, and our take profit is below. Now, so we'll now use, based on the chart and what we are observing on the chart, we'll now make a decision whether to buy or to sell. Please, this is just a demonstration. We are not doing an analysis and doing an actual trade, okay? We are going to do that one on Thursday. On Thursday, we are going to have a class. We are going to do a live trading class where with your live account, you are going to initiate trade and make money. So the reason we are having today's class is on that Thursday, we don't want anybody to have issues. And we don't want to go back to be explaining this. We just want to start, say, okay, this trade, pick a buy, pick a sell, set your stop loss, and everybody will be able to do it with ease. Okay, so now, let's use this as an example. Let me find. Just give me a minute. I want to use the system so that it will be clearer. Okay, so now, I want to believe this is clear to everybody. Can see this clearly. Can everybody see this clearly? Because that's why I try to change the font and everything so that we can all see clearly. So let's say, now if you look like this now, this has been going down, right? Right? So that means from here, it has been selling, right?
Yes.
So of course we have some highs here. Again, we are not doing analysis. So let's say we want to pick a trade here now, and we want to pick a sell. We just want to go with the flow that we have noticed. Are you getting me? Should we start with a sell or with a buy? So that it will not be confusing. Let's start with a buy. Let me look for a currency that is buying. No, it's just so that the calculation of how we set this thing. Okay. Now you can search for it. You can do the same thing now, right? This USDCHF. Can you all look for it in your own MT5 as well, so that all of us can be on the same page? USDCHF. CHF. This 5 minutes.
X or normal.
It's .s. Any currency that you are picking, make sure it's the one with .s.
Why is it different?
No, we are using a demo account. It's a standard now. All the demo we open for them is standard.
Standard lot or what?
Yes.
Is it one with S?
It's the one with .s. It refers to a standard account. And the demo that we created for everyone here was standard accounts. The one with S is a standard account. That's the one you can trade. The other one you cannot trade it on MT file. Are we all together? Have we? Okay, now click on. You know how to change the time frame, right? Just click on it. You are going to see the time frame. Just click on the chart You're going to see it's going to be different time frame. Click on 5 minutes. M5.
So at what time frame?
USDCHF.
So what time frame?
5 minutes. Use 5 minutes. I just want so that it will be clear. I just want you to see how we move. USDCHF.
How do you take? Sorry,
Are we all on the same page?
I click it and it's showing me.
I've brought it here by click and it's showing
Chart.
Okay, chart.
It will show you this chart. So now, because now you need to look at the chart first, make your analysis before you go and execute any trade. Now, this is the current price. This is the current price, right? So I will see that it has been buying, right? Please, I need us to be together. It has been buying, right? So what do we want to do? We want to buy. So if we want to buy, our take profit is going to be above, and our stop loss is going to be below. So how do we decide our take profit? That means we are going to look, okay, the price is here at the moment. We believe that it's going to get to, let us say that it's going to get to here. This price is 0.78850. Okay?
Five minutes.
5 minutes, yes. So we said that we are targeting this place as our take profit, right? So if you want to check the amount of pips, where are we now? This is 78810, and we are going to 78850. That's how many pips? That's how many pips? It's 4 pips now. Because this is 40 points. Abi? This is 40 points, so that's 4 pips. Now, it's because we are using a lower time frame. That's why the movement is very, very close by. If you are using a higher time frame, there's going to be a distance from it, yes. Maybe 1 hour upward. Now, so let's say, now if you want to set take profit, our take profit is going to be below. Let's put something like this. Now go to your chart. Go to your market execution. Go to market execution. I thought we did that earlier. Market execution, right? So now go to where you're going to set your now. It has already hit the take profit itself. Abi? It has already hit the take profit now.
Yes.
So let's just set it. I just want us to set it. We are not really. So that means let us pick another take profit because it has already hit that one. It has already got into the end now.
5 minutes. It's selling.
No, it's not on selling. Like, no, it's still buying. I'm just saying where we wanted to use as an example. It has already got it to that point. So let's just shift it up. So now, go to your TP. Go to your TP. That's take profit. So let's say we are targeting here now. This is where we are targeting now.
Where's the price?
TP, just set TP.
So I just set your stop loss first. It's going to show you the tip.
The price.
We are TP.
Now use 0.8900.
We should put we should
0.78900.
My own child is not saying that.
okay, so we are stop. That's our
Can
stop.
you show them your phone so that they see where they're supposed to write it?
Is it because the time frame is too short?
Now if you click on TP,
That's where you write it.
you see that you can type there. That's what you are going to type the value.
It will give you a price and you adjust it.
Yes. No, just type
Type
it.
it. Put whatever price is there and write the new price. Like this.
0.7890.
So write it down there. That's our tip. Is that what tip is?
Yes. Yes.
I wish this thing is reflecting now.
What?
Just write it.
No, the phone interface is different from system interface. That's the
You're
issue.
going to see everything.
That's even got. So for your TP, that's take profit. Type 0.78900. You've typed that. So let's now set our stop loss. So where is the current market? We are presently in 0.8830. So let's use. We are targeting. Let's 0.78800. 788. Yes.
78830.
Yes. 78800. 0.78800. No, it's a very short.
So do you now enter?
I think we should just patiently wait. It's giving us quick process. So just wait. When it gives you the next instruction, then you take it. Just be patient.
Have you insert both the SL and the TP? Yes. Now what are we doing? We are buying, right?
Yes, you are right. Stop.
That's stop loss. The SL is 0.78800.
0.78800. So write it in that SL.
What of TP?
It's almost there.
TP.
I'm using 5 minutes actually so that they can see clearly.
0.78900.
Have you all written it down? Are we buying or selling?
We are buying. So click on buy.
Let's press the buy. Press the buy.
It's a demo account though. You see, I'm not doing analysis.
I don't buy you.
No.
I'm in the market.
Press the buy. Is it demo?
We are not in the market, we are here.
I'm in
It's
the
demo.
Hold on first. Did you see the place for stop loss?
Yes.
You saw the place, right?
Yes.
So you can see that you can adjust the stop loss with land. 1.0, 2.0, standard, mini. You cannot adjust it there.
Not nice.
Please, on your demo account, press a buy. If you're on your demo, click on the buy. The live trading is going to be on Thursday. That's not going to be trading live.
Yeah, that was my
So
mistake
those
actually.
ones, use your demo. Press
That was
the
my
buy.
mistake.
Okay, so it has been picked already. Use the 30 minutes.
Okay.
Are we all together? So we have to be very. Let's all pay attention.
Please let's pay attention now. Let's do this. Now we are still using the same currency pair.
So we're going to change. The reason why it's not executing, market has gotten to this point. That is why it's not opening.
Let's use this. I mean, it has it to TP again.
So you make it
Let's
now.
use. No, down that. That is down. No, yes, we are still buying.
So you're still buying.
Our take profit is up, our stop loss is down. Now, wait. If you go back to market execution, I mean, I believe everybody knows how to do this now. Yes, I will do that. Now, if you go to market execution now, where we just initiate a trade, before you get to the place where we see the bid and the ask price, you are going to see different lot size there. You have 0.01, 0.02, 0.1, 0.1.0, and co. Do you see that?
Look at
Go to this page where we initiate trade earlier. When we initiate trade, now don't initiate this trade yet, though. Just don't initiate this trade yet. You can just type your SL and take profit. Now, if you go up just above the bid and the ask price, you are going to see different lot size. The lot size are written 0.01, 0.02, 0.1, and so on like that. Do you get it? Do you see it there? Now, that is where you choose your lot size. Are we together? Now, I believe you know if you are using. So you can use different lot size. You can use 0.1, you can use 1.0, you can use 0.01. Now, above the bid and the ask price, you are going to see different numbers 0.01, 0.02. That's why we have the lot size.
This is my stop loss, right? And this is my take profit.
Yes, this is your take profit.
This is my take profit.
Yes.
And this is the lot size, right?
Yes, this is where you are going to determine the lot sizes.
So why should we set it?
You have not set your take profit, though. It's 000 I'm saying there.
So please set your take profit. Do you know how to do that?
Now, if you have insert your take profit and your stop loss, now go to the lot size. You are going to see there are different lot sizes you can use from 0.01. So 0.01 simply means that if it moves by 10 pips, you have made $1. 0.1 means that if it moves by 10 pips, you have made $10. And 1.0 means if it moves by 10 pips, you have made $100. No, I mean you choose. Okay, let all of us use uniform. Let us use uniform lot size. Use 0.1.
So 0.1. Step on the lot size, change it to 0.
You can just type it there and just do it. 0.1.
Please, the moment you are distracting like this, hello sir. Let's pay attention.
0.1.
Yes, 0.1.
Now, if you have picked the 0.1, it's 0.1. Type it. You can just type it. You don't need to be moving it around. Just click on it and type it like you're editing. If you have done it, you can initiate a buy.
Press buy.
Yes.
What is the take profit again, please?
Again, the take profit is 0.78950.
The saving value.
The take profit. You are the one that typed the take profit. The currency is USD CHF. Yes, sir. What is not working?
This one is
0.7.
Why will it not work? What's wrong with
Look
that?
at your take profit.
What is
Look at your stop loss.
What's wrong with it? Just go ahead.
Please, anybody still having any challenge? Hello,
What's
sir,
wrong with
can
your
you
phone?
hear me?
this is empty for
It's a trade. So you can see your ticket.
No, that's it. This is empty for me. Now, if you want to do it, add it to it. Now, this plus 0.1. If you add it now, then you can go back. You can clear this. That's 0.10. Do you see the way I did it now? So initiate the trade like that.
Alright, so you guys have opened the trade, right? When you are done, press buy. Because you are buying. Look at the buy at the bottom.
If you have set everything, let's buy. Yes, buy is done.
You set everything. Set the stop loss and press buy.
Have you seen buy?
Press buy.
No.
They don't get it. That's what we don't do it. That's what we do.
Your network, no. It's your network. Alright, it's okay. No.
And this one is on profit, right? This one is on losses. The first one that we use is standard loss.
You use a standard loss side for that one, yes. And the entry is also different.
Yes.
Where we enter is also different. So see, it's also getting to profit now.
Are you in profit?
Please check. If you have initiated the trade, you should be in profit now.
If you have opened the trade,
For the two.
The second one is on profit, but the first one is on loss.
it's alright. So now go to the chart.
First one that we initiated, you should be in profit. But then, if you set your take profit, already it to take profit.
That is the place where you currently see your running trade in profit or loss. Now go back to the chart. Are you all following me, please?
Please let us follow.
If you distract yourself, you won't hear what I'm saying. You won't understand. Go to the chart. Can you see the chart? Can you see the chart? Now opening the chart, what can you see? Can you see your stop loss and your trade showing?
Yes.
You can see it. You see SL on the chart. You see take profit, right? Very good. That's the image you've set. Can you see? This is your SL. This is your buy. You didn't set the take. Where's the take profit? This is your take profit. Can you see everything? TP, SL. Very good. Because you have set it. So if you go to the chart, you see
Yeah, it's going to
TP,
show for the two because it's two
SL.
trades that we have on it. It's going to show for the two trades.
Can you see it now?
Okay, see it.
So are we all there? Right? Now remember, this is a random. This is a random what? This is a random trade. Are you all following me? A very, very random word. So now we want it's very simple to execute, right? We just want you to understand this. Now let's go to the next. Let's take a sell now. Now open GBP USD. Search for GBP. Everybody should be in profit on that trade. Am I correct? Everybody is in profit. So go to GBP USD now. Go back, search. I'm sorry, you should know how to operate this now. We've shown you how. Go back to the place where you can see all the currencies. Search for GBP USD.
Yes, we have it.
Yes, GBP USD. Are you seeing it? Oh, yeah, when you open GBP USD, tap on it and click New Order. Click New Order. Just tap on the currencies. That's why if you follow my instruction, you won't lose the road. If you don't follow me, that's when you lost. Just wait for me after the new order. Just wait for me after the new order. Have you all clicked on new order? All right. Now, on the new order, we are going to sell. Are you hearing? Are you all together? We are going to be selling. I'll show you where your stop loss will be, where your take profit will be. Are you seeing? So now, on the new order, stop loss 1.34100. Go back, sir, to GBP USD, please. Tap on the GBP USD. That was the instruction. Click on new order.
Oh, okay.
Can you see the take profit? 1.3400. 34. Follow me. 1.3400. If you follow me, you won't miss road. Okay, is it done? 1.3400. Take profit 1.33716. 1.36716.
You can use any of the MetaTrader, either 4 or 5.
Stop loss. Please follow me. Don't get, if you are going to be mistaken, write it on the paper first. Stop loss 1.3400.
If 100, sorry, sir.
1.34100, sorry. 1.34100. Stop loss 1.34100. That is stop loss.
Did you enter?
Take profit 1.33716. Stop loss 1.34100. CP 1.33716. Are we on there? Oh, yeah, said.
Lot size.
Decide your lot size by yourself now.
Now you should be able to decide your lot size
I
now.
taught you standard lot, mini lot, micro lot. Am I correct?
Yes.
So you know how much you are making per pip, how much you are losing. So decide yourself.
So we are selling.
You are selling now.
If you like, use 200 lot size.
No, I've made $1,000.
This is your demo account. You have paid, okay, so you go put it there, right?
How much did you say you make?
Have you also? Have you all taken a sell?
Yes.
So go to the charts now. You're going to see. Go to the GBPUSD chart. You see your stop loss and your take profit showing clearly for you. And we're running the profit on all, right? Very good. So at least we've shown you how to trade, right? So you can either wait for it to hit your stop loss or close the trade. Are you listening? You can either wait for it to hit your what? Stop loss. Alright, let's close now. Let's close the GBPUSD trade by ourselves.
So I want to ask a question. If you're already on the chart, how do you know your lot size? When you already
You are very open now, so you will know before you open. So will you forget?
No, what if I forget?
I don't know what you do.
I forgot
How will you forget money? Write it on a paper. You can just go back. You can modify and go back and see. Tap on the price. Tap long press on it. Follow my instruction. Long press on it.
Where's the price?
Click on modify. So you see your lot size you use on it.
No, now where's the price? How do you know?
Are we all together?
If you want to know your lot size, press on the price.
Long press on the trade that is currently running. So now I want you to close one of the trades. Are you following me?
Mine is on profit easy online.
Because you entered different time, that's why. And you entered in the high. What is the lot
Are you
size?
using the same lot size?
You entered different timings. If you go to your chart, you see that you entered different timing.
Your entry time is different.
Timing. Your entry time is different.
Check
The
it.
market
You can
is
see the
moving.
entry time.
So because it's moving, entry time is different. Are we together? So I want you to do something now. We want to learn how to close trade. Is there any questions, sir?
Yes. The timing. If somebody entered 5 minutes and also 15 minutes.
So the time frame does not matter. It doesn't matter. The time frame just shows you what the market is doing. It doesn't matter. When I mean timing, if you enter a trade 2 minutes and I go and enter the trade 2 minutes after, it's different.
Yeah, that's
So
after.
your price is
For
always
all the
fixed by
trade.
price.
All the trade.
Yes.
So now let's close the USDC HF. Are we together? Now long press on the trade that is running. Long press on it. Have you long press on it? Can you see close order?
Yes.
Now click on close. Look at the running trade. Please, if you follow my instruction, you will not miss me. Look at the running trades. That is not the running trade, sir. Exactly. That's the running trade. USDC HF. You are not tapping on USDC HF.
Which one?
USDC HF trade now. Tap on it.
Okay.
Any of the trade works. Have you long press on it? Have you long press?
Yes.
Can you see close position?
Yes.
Click on it. Have you clicked on it?
Yes.
Now close the position. Look at below. What do you see?
Close with profit.
Now close it. So close.
All of them.
Have you? You guys, when you do this, I've spoken to a lot of people. You came in mistaken. Congratulations. So
But it's still running.
it's not running. It's another trade that's running. Hey, you have not closed now. Close the profit. Tap on the close the profit.
Okay.
Have you all closed now? Everybody have closed.
Yeah, don't back.
Go back here. Hey, that's closed now. Look at that. That's your money. Can you see you have $106 now? Can you see $106?
Yes.
I've made them.
So you made $6. Now look at the next icon close to it saying history. Click on the history. Have you seen the history? Look at the bottom. So history shows you trade that has been opened and have been closed. Can you see now?
Yes.
So you are closing how much on the trade? $6. Very good.
6.8.
Very good. So can we all open and close trades now? Can we move to the next session? So that's your history, your close trade. So that's your close trade. You have close trade already in the government. If you join the two together, it's how much? So you have closed already $100. Do you understand? So you trade have closed, but that's the amount you made $95. Are we together? So now, in the next we'll take a 5-minute break. After the 5-minute break, we'll have the software class. We're not staying on the software class. So 5 minutes break.
Who's making MT4, I'm using MT5.
It doesn't matter. What determines is when you enter and the current price of the market. That's what determines your loss.
When you enter,
The current market.
So if we want to, let's say we are doing this on the real account, and let's say I want to close this, so I just want to make sure I get the exact ROI. I can just target it when it gets to like,
Don't set your take profit out.
what if I don't feel like take point?
If I don't you can close the trade. If you click on it like that,
It's currently on, it's currently on the loss. So I just want to wait for it to like get.
then you can do that. But the best way to trade is to, before you initiate a trade, already conclude on your TP and stop loss, so that you just enter state and you have your target. And what is it there? That's it. Market does not stay. So the fact that you enter once and it is a negative, it will not shake you. That's why we usually have stop loss. You can see the way it is moving. It was one in negative, it will move again to positive. For positive again, it moves to negative. It will still move back to positive. Once you have stopped the analysis you have made, you stay. You cannot move. You get it. That's how you. Because if you are not sure, then there is no point in trading. Get it. If you are not sure, then don't risk it. But if you are sure, go ahead with it. That's how it is. And the stop loss is in case it now eventually did not go your way. This amount I'm risking, I let this one go.
We will not lose. We will only make money.
We'll get to that part. We'll get to that part. When we get to that part, we'll process. Yes, ma'am. Trade. What to trade? Yeah. We usually send signals to our funded clients group. Yeah. I don't hear you. No. That one is money analysis. We usually have money and afternoon analysis. That one is different. So, but we have our funded client group where we sell signals. If you have signals, have you funded your account? Oh, don't worry. It will be done today by your account manager will do that today. So, for example, there was a trade that was sent out. There was a trade that was sent out on Friday. How many of us saw that trade? If you're on the funded client group, you saw the trade. Yes. And some people, as at yesterday, some people have already made more than $100 on the trade. Depending on the lot size you use. It does not. It's a swing trade. So there is a way we trade that. So if you have already funded your account, you are going to be added to the funded clients group, and when we have signals, we are going to drop it. Then you can pick it and you can use it to make money. But on Thursday, we are going to have a practical live class, where we are going to trade live accounts, use software to make profits.
Excuse me. So if you place, sorry, for instance, that trade on Friday, if it hasn't gotten to the stop loss I wanted, I can still leave it till now.
It's not the way we want to make money to our doing. Since on Friday, we don't put in other signal again. Up to today. What we have
The market does not open on weekends. Yeah, now, see, one of the things you have to learn in trading, you must learn to be patient. Patient means we don't control market. What we do is you analyze the market, and when you see that, oh, with this analysis, I can now enter this trade, then you trigger it. That means if you have not seen clear signs that this thing is going to go the way I want, you leave the market. And it's not as though maybe we are analyzing all the pairs in the world.
Let me ask you to that question.
I'm with you.
Based on what you just said, that the trade is swing trade, that there's the way you like a beginner like us now that don't know that is a swing trade. There was you leave it now on Friday based on your mentor.
It is still the trade is still in profit now.
Is in negative now.
It depends on when you enter.
Based on when they say we should enter.
NZD-USD.
Based on when they say you enter. It went on profit on Monday. It was on profit on Monday and start coming back down.
Yeah, we posted something about retracement yesterday. That is going to retrace, then it now go back and continue in that direction. Because a swing trade will retrace. It's not that market will not just be going, no. It's going to retrace, then go again. So that's how it's going to be moving.
It goes like that if it's in news. If it's normal market movement, it always goes like this. So there's no news. So it's definitely going to retrace. Definitely going to retrace. So as a swing trades can last weeks.
No, it's just like this now, for example. This market now is going, this one now, you see that it's going up. It's going up. But at some point, it went down. Then it go back up. It came down, go back up, comes down. That's how market moves. There has to be retracement because it's an activity of buyers and sellers. So it's not just going to be moved. Even if there is news, at the point, it will still retrace.
Please, don't be offended.
I'm not offended.
Let me stand up and ask this. When they ask us to buy based on that very particular market, when they ask us to buy and the stop loss, you find out that the stop loss is large and I understand, but in fact, you want to use it. But currently, is it possible for us to narrow down the stop loss so that the stop loss will no longer be stop loss, but it will only be part of our profit?
Now that's what we call break even.
You don't understand.
Let me get your question.
Okay. Here is our stop loss, and here they say we should enter the trade. Can't we find a way to reduce this gap for stop loss? Come down like here and make here your just to you find out that here from here to here now you are adding it to your profit. You understand?
Let me explain something. Now, what you are saying is very dangerous. Now, again, we don't control market, and it does not mean that every time we do analysis, we are 100% correct. No. Now, you can say that a market is going to buy, and maybe for a while it's buy, then suddenly change trend, and then it can go down. Now, the reason we usually set stop loss is that stop loss means that once you get here, I'm taken out of the trade. Now, if you go and start your own trade at that point, at where we are playing stop loss, we are not saying market is going to get there as well. Market may not touch there at all. If you go and put your entry there, the market can be in profit and your trade is not triggered.
It will not pick you up.
It will not pick you up. Because if the market does not come down to that point, let us say this market has been going up. So you now say, okay, let us say maybe the market was here. So the market was here. So you are like, okay, we asked you to put your stop loss here and put your take profit here. So you said, okay, I want to put my stop loss here. I want to start trading from where you put the stop loss. Now, even though the market is going to retrace, that time market might not get to this point, and it will go back up. And once you go back up, it's already in profit for those who are in the trade. Now, you do that, put your entry here. You just be looking. Some people are already making money, and you are waiting for it to be here. And once it go like this, there is a chance that the market will never get to that point again. So while some people can be making money, you still be waiting for your own trade to trigger. So that's why for beginners primarily, usually explain just straight. Like based on the analysis, you can pick buy now, you can pick sell now. If you think that okay, the market will get to this point before it buy or before it sell, you write it there. You write entry, this price. It means that don't enter immediately. Wait for that price to get here before you enter, or send a pending order to that place. Now, if the price gets to the point, oh, let my trade, let it trigger. That's how you do it. So a trade you must have a stop loss and a take profit, and what you are risking in that particular slide. I'm waiting for.
No, not for zero.
The USDC HF that I will pick earlier. What the second one? What was the TP? What has it triggered already?
One.
No, the one of 0.78.
Yeah.
0.78, 750.
That one.
Is it just now?
USDC HF.
Yes, USDC HF.